And we've got a question for Tim. Hi, Tim. How are you?
Good, good, good. So, you have a question?
Yeah, there's a question for you in the den. Someone wants to know, please ask Tim about Goro, Goro. That was his pick.
Oh, yeah,
I don't want to take you by surprise. If you haven't got anything prepared, that's fine. But that was the question in the den.
well, actually, I'm familiar with it. Actually, I sold my position out around, I can't remember, right around 80, I think it was. So anyhow, then I got it into DBS. But it was, I don't know, the pattern kind of scared me a little bit. It's still bullish. I think all gold stocks are going to do fine. If you hold it, it looks like it's starting to break out again. Trends up. I'm kind of going into lower price issues now, actually down in the 10, 15 cent range. But anyhow, if you are holding it, I sold my position, but in general, most gold stocks, including a GR or GORO, still going to go up. So, I don't think there's a top of any consequence here, so I'll put it that way. So hopefully that answers that
Okay, I'm sorry. I
question.
didn't mean to surprise you. So, Tim, do we
No,
have your charts?
yeah, charts are up.
Oh, let me
You should.
just ask Al. Let me just see. Al, do we have? I have Tim. Okay. Al, do we have the? Oh, they're showing. Okay, everything's set. Tim,
All
we're
right.
ready for you. So this is Tim Ord from Ord Oracle. Comes on Tuesdays and Thursdays. Absolutely fabulous timer and certainly the picker for gold, telling us about gold for a long time. Could you tell us exactly what you've got for us today?
All right. So this is the SPY. It's a daily chart. Last Friday we had a 2.71%. Actually, let me start. Get a draw tool here. Um, Last Friday, which is basically this day right here, the market declined. I think it was 2.71%. Declines over 2% normally go in clusters. So this is a first sign off of a high that at 2%. So we're in a this is expiration week, which normally has a bullish bias. I think this week will be an up week, but next week is one of the weakest weeks of the year, seasonality wise. So I think we're having a pullback. I'm not long yet. We don't. I have a couple of reasons why. I'll show you as we go forward here. But we, on excuse me, but on Friday we did have a selling climax. That is where volume increases at least 100% or thereabouts compared to the previous day. So this is indeed a selling climax. You can see volume pretty much doubled on that day, and we did go
Huge, yeah.
down. Yeah, we did go down 2.71% on Friday. So what's probably going to happen? We're going to stay in this vicinity this week, and probably next week. We're I think this is too low here. I guess let's see if I can reverse that. But I'm thinking next week we're probably going to go down into this support area where panic has formed in the past, and I think that's basically kind of break this low a little bit last Friday and go into a support area. And I think that's where the major low is going to form somewhere between 650 to 640, probably in the higher end of 650. And the selling climax is all it's going to be is just a retest. So yeah, that's what I'm looking for. I am not long yet. I think we at least get another uh, push down into the support area. Next chart. This is a reason. See, this is. I'll go to this one here. This is the ARMS index 10-day average, which is 9.7. To really get a bullish signal, you need it up around 1.2. As you can see, we're kind of not there yet. The 5 days comes in also at 0.97. You need it up around 1.2. The 2 day and the 3 day is not important. The longer terms one are. But I think this area where the 10-day trend, I always talked about it over the last couple of years, you need panic in the market to get to bottom. If you don't have panic, you don't have a bottom. I shaded in light pink, the times where the trend, 10-day trend, did get into that 1.2 area, and these are all the times. And if you notice, most of them come right
Right.
smack at right smack at the lows. You can kind of see them there. For some reason, we didn't get it here. We almost got to 1.2, but didn't quite. So on the market, there's a low there, there's a low there. So I'm thinking next week we're going to see panic in the market, and the trend's going to rise at 1.2. So uh, so I'm thinking that's the reason why we're going to have the second pullback. Again, you got a 2% decline. Normally comes in clusters. We got one. We got one in front of us. It probably won't come this week, but probably next week. And if we do get the trend, 10-day trend, up around 1.2 or higher, I'll end up with a bicycle, and that bicycle probably lasts a year in. So this is the first bicycle that's going to be sustainable other than a short-term trade. So I'm thinking this is a multi-month bicycle. Could go in the first part of the year. So that's what I'm kind of looking for. There's another thing here that's not quite right. This is the equity put call ratio readings. It's coming around 0.5. The 5 days coming in 0.56. The 10 days 0.54 and 0.53. That's usually where tops form, and we haven't reached areas 0.55 on the 5, 10, and 21 days usually predict a top, and pretty much it's kind of an early warning sign. These are the previous ones I had going back for the last couple of years. So we're not into the bullish territory yet on the equity put call ratio, along with the 10-day arms. So here are the music.
There's the music, folks. We will be back with some fascinating analysis going on right now. So we're looking forward to the follow-up. We'll be back after this break. There's a sudden sell-off. The market suddenly dipped. Dow's only up 180 now, and the S&P's just gone negative. We'll be right back. Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. We just had a note saying Trump considering terminating business with China on cooking oil and other trade elements. That seems to be S&P put it into the den. That certainly took the market. The S&P futures were trading at 67.10, right at the bottom of the that support line for the horizontal. Whoosh, we went down to the 65, 66, 76, 7, trying to rally, and now it's just kind of hovering. So, Tim, could you continue, please?
Yeah, let's take a look at the gold market. I showed this chart before. It works pretty well. Goes back to 2010. Excuse me. And got a frog in my throat. But anyhow, this is 2016. The bottom window is the... hang on one second.
So while Tim's just clearing his throat, he's got a chart up of the GDX, GDX advanced decline line, and the GDX up-down volume. He's back. All right.
I'm
Tim,
sorry.
Can you continue, please?
Yeah, the bottom window is the 50-day average of the up-down volume. This is one I key off of. For some reason, works better than the advanced decline, which is this one up here. So this is the one I pay attention to. And anyhow, it gets up around 30, which it did back in 2016. And it got up there again in 2019. Currently, we're at 32.66. We're actually above 30 right now. And previous times we got near 30. The market went up for another 5 months in 2016 and another year in 2019. So at minimum, I think we got at least the rally to go. We'll have some minor consolidation. We got one going on right now. But in general, I still expect the market to work higher, pretty much unabated to the upside for at least another 5 months. So maybe 6 months, maybe longer. But I think we'll at least go into next March before we get, I think, a worthwhile consolidation. Because I'm not seeing any weakness on these indicators, advanced decline or actually the up-down volume. So even though we're kind of consolidating here, matter of fact, I can go to that chart. I think this is just going to be a sideways move. I don't know how long it's going to last. Maybe last November, and maybe we're ending now. But we had two selling climaxes. This was October 2nd, and this was October 9th. and we had two of them at pretty much the same price. So this sport is pretty strong. Selling climaxes come at bottoms. You can have retests, but in general, the selling climax is the bottom. Even though a lot of times you minor break them, but not by much, before you start going reverse to the upside. So 34 or 74 area on GDX is strong support, and also. Both these selling climaxes started around the 80 range, and which is a little bit, which is going to be resistance. So we're up against resistance right now. So I'm thinking we're just going to bounce around in this trading range and build a consolidation and move sideways for a little bit to build energy for the next rally up. I just don't know when that rally will begin, but performance, a lot of these gold stocks are still just chugging along to the upside, not doing anything unreasonable. The bottom window is the 18-day average of the up-down volume, and the next window higher is the 18-day average of the advanced decline. As long as those two indicators stay above minus 10, which is basically down here, the uptrend's intact. Even though you have consolidations, market may move sideways. It's not a top of any consequence. So this is just a timeout in an uptrend. So even the short-term picture is actually still bullish here. We're not looking for a top of any consequence. So most of these gold stocks are still going to actually just kind of move higher. What I'm thinking is, these major ones that really have performed over the last year or so are probably going to take a rest, and the secondaries are going to take over. And I think that's what's going on right now. But I don't see a top of any consequence. And again, we talked about this not last Thursday, but last Tuesday, a week ago. I think there's a 12-year cycle that kicked in beginning of 2024. And this 12-year cycle is going to go into 2032, I guess, or something like that.
That is incredible.
Yeah, yeah. So I'm thinking this is I measured this RSI has never been this high going back to actually 2008 last time it's got this high, and that was kind of picked off this high right here. But in general, the RSI, when the XAU is outperforming NDX, the RSI basically stays above 50, and I think reaching we're at basically 70 right now, 69.99, but we're at basically 70, and that's coming off of a low. That's initiation of an uptrend. Last time that happened came in at the 2000 bottom. It doesn't pick out the exact low, but it does tell you initiation uptrend started. So this rally lasted about 12 years, and last time we had that was in 2000. Now we got it again. So what that says is the XAU, in other words, gold stocks, will probably outperform the NDX stocks or the QQQs or the NASDAQ stocks. I think that's what's going to go on. So this performance to the upside here, even though we'll see some consolidations, the bottom's in. I think the trend is going to continue for a very long time, I think years. And some of these penny stocks, which I played in 2000, I remember I was buying BGO around a quarter and it went to $15.
Oh, I remember BGO, yes.
Yeah, so I think that's kind of what's in front of us. And things may change. If it does change, this RSI would give you a first warning if it got down to, say, around 40 or so. That should not happen. If it does happen, that would suggest that 12-year cycle is out of whack. But I don't see that happening. I see gold stocks finally were super cheap on the bigger time frames as far as measuring XAU against gold is historically low levels. So those ratios, I think, are going to perform pretty well. So anyhow, I'm pretty big in the gold stocks right now. And I think this trend in general is going to continue for number of years. There'll be consolidations, but most of them are. I think this one we're doing right now, it may flip sideways for a couple 3 months, but I don't see a top of any consequence. So I stay in the gold market right now, even though they have a big run. This is off of a major low. This is just the beginning of a surge to the upside. So, what does that mean for inflation? Not sure, but it's probably not a good sign. So, we'll have to wait and see.
Right, but I'm also noticing that in the consolidations, they've been very mild. A stock like AEM, Agnico Eagle Mines, at highs has just a sideways consolidation. Really doesn't do very much. So your analysis is fabulous. So we really appreciate it. So folks, Tim Ord Oracle, you can check out his front page. He comes here Tuesdays and Thursdays to give us advice and to tell us what's going on. Thank you so much, Tim. Always appreciate it. Have a great couple of days.
All right. Talk to you next Thursday or Thursday.
Yes.
Thanks. Bye.
Thank you.